What does this all mean for capital investment? Well, we've been tracking capital investment, and I went back before 2007, all the way back to 2005, so I could get a little better look at 7 years of data now. And we look at this both in terms of our annual stewardship investment, which is a recurring investment we could track at college campuses, and the asset reinvestment, or the one-time capital that we're seeing invested now. Remember, this is investment just in existing, so I've taken out the new space out of here. And you can see a pretty stepwise, steady increase from 2005 to 2009 in capital investment. On a square foot basis, went from about $4 a square foot to just under $6 a square foot. That dropped off rather dramatically in 2010, came back in 2011, but it's still below 2008 rates. So we're seeing a cycle, a downturn cycle here, and it may be only 1 or 2 years, and we'll begin to see an increase. But this certainly affects the economic downturn and the willingness of campuses to invest in existing space. What I think is another important trend is to just take out that one-time capital and look at the annual capital. And this may be more reflective of our Sightlines database and the philosophy that Sightlines uses and works with campuses to encourage campuses to invest regularly on a recurring basis and put in money annually. And you can see that back in 2005, a little more than $1.25 a square foot, got up to about $1.50 in 2009, went down slightly in 2010, but back again in 2011 at the highest levels in the time we've been tracking it. So very important to see this recurring capital investment steady and even slightly increasing over time, which tells us that campuses are getting the message that there's a big payback to putting money into the campus every year. A recurring capital dollar can go a long way and has a multiplier effect in terms of the campus being able to upgrade its facilities, deal with those life cycles as they come due. And one of the trends we've been monitoring for the last few years is the gap, in fact, the growing gap between public and private institutions in terms of capital investment. And you can see that the public institutions started about even back in 2005 and 6, and now, and for a number of years, 4 years straight, actually were falling farther and farther behind. You can see that gap being quite a bit wider in 2007, 2008, narrowed a little bit in 2009. And what was interesting is the recession has been sort of the great equalizer. That is that the public and private are just about the same. And in fact, the public institutions on a square foot basis are spending a little bit more than the private institutions right now. And so that's a change in trend, something that is very, very surprising to us to see that happen. But it's just very much because of the drop, the precipitous drop in public spending, or private spending in 2010, even higher, sharper decline than in public. And we'll kind of watch this trend over time to see what happens between the different types of institutions. One particular group I wanted to point out are medium-sized campuses. These are campuses on our database that have between 1 and 4 million gross square feet. They've had a real big impact, because if you take a look at 2005, spending about $4 a square foot, by 2009 they're up to $5.50 a square foot, and it sharply dropped off in 2010, and it's really not come back. You remember when I showed you both the public and private slides, both types of institutions had come back in 2011 significantly to make up for the losses in 2010. Hasn't happened among this particular sector. Many of these medium-sized campuses are what we call comprehensive universities, both public and private. I think they've had the most difficulty coping with the decline, both in terms of the privates have had difficulty in terms of their enrollment, and the publics have been cut a lot by their states and by their capital funding in the states. And so we're seeing that many of these types of institutions are struggling under the recession. They've been the hardest hit as a result of